Okay, so yesterday we started framing out a breakout strategy where we are attempting, in a case for a downtrend like this, we're attempting to be selling in the impulse move to the downside, and then we'll attempt to buy a correctional move to the upside. The downside, as with every strategy, is that when we are in a ranging market like what we have here, there's a tendency that we'll be in trouble. Because while we attempt to buy, price going northward, price could suddenly begin to make a move to the south. And then when we initiate a sell, it begins to move upward. This is true for every trend following strategy. Most, if not all, trend following strategies will do poorly, if not badly, during a ranging season. And your duty and mine as traders to understand the strengths of our strategy and perhaps when not to use them or when to use them. From my experience, it's difficult to know when not to use a strategy in real life, because if it's ranging, it would have formed, let's say in this case, you'd have had 2 highs and 2 lows before you conclude it is ranging. And that means you might have taken 3 or 4 trades, and that wouldn't have gone your way. If you take 2 trades per day, you might have had 8 back-to-back losses before you decide that the trend is now ranging. And then when you make up your mind it's ranging and you don't want to trade a range and you leave out the strategy, it could just start trending the very next week, and then you are back again to square one. So we must have that at the back of our mind, the uncertainties in the market. But what are we trying to do in a breakout strategy? We're trying to catch short-term move, change in trend, hoping that the trend will continue for long. And if it doesn't, and it does change, then we'll change our mind as the signal comes. We should also have the second negative thing in mind, is that when you are selling, when price eventually begins to buy, you most likely lose that last trade you took for a sell, right? Around the time or the day when price made a U-turn to go bullish, you might lose that trade. So I'm taking time to emphasize not the win rate, but the fact that you will lose, so that you have that at the back of your mind. This is not a, a show to make us feel good about ourselves. We take losses, and losses are real. And you could get frustrated, depressed, and everything when you lose. It's just real. All right, so yesterday, we were able to frame out a breakout where we chose one particular hour, or we said a couple of hours, and we can say, okay, if price breaks out, then we'll attempt to either buy or sell from those regions, right? Then we noticed that we were buying and selling without bias, and sometimes we were not getting it right. We had multiple days where we just started selling and suddenly price starts buying. And when we stretched price, we discovered that happened because we were in a short-term uptrend. So we decided yesterday that what could we do to help us determine when we're in a short-term uptrend, so we would avoid sells. It doesn't mean selling wouldn't hit TP, but we just avoid them, just to put some form of sanity and to see if we could control our loss rate. We'll avoid it, and then take only buys in case of a bullish trend. So we added this indicator, the curve indicator, painting red and green on the chart. We call it value line. And for those of you who have passed the fostering program, there are different settings. You could use 23. I think right now on this chart we have 24. You could use 23 or 24. 24 will take a little bit longer before it changes. So it helps you filter out some fake out on 1 hour. But then nothing is completely good in the Forex market. It could be good at some times and then be bad at some other. Right? So then we asked ourselves, even though it is a breakout, can we trade a counter breakout? So let me explain what I mean. In a breakout, we would have pictured this box. And let's say price closes above it, we will now be bullish. That's the bullish breakout. And our value line would have told us we're bullish. We said, can we take a counter breakout? So in a case where price comes to the downside, typically from the very first iteration of framing this strategy yesterday, we would have automatically gone for a sell. But now we're saying, since the value line is bullish, can we avoid this sell and then see an opportunity to buy? So how would we know that we should take a buy? We said, if this is the last or the lowest bearish candle, should we get a bullish candle close above it, we will take this as a signal to buy. We gave two advantages of this pattern of thinking. Number one, a tendency that it gives us an entry earlier. So rather than waiting for it to break out here, we'll be entering somewhere around here, which is a much more earlier entry point. Then second advantage, it makes our stop loss smaller. So that way, we can easily hit our RRR depending on what we decide. So we'll be looking at these two together, these two concepts together today. So here I have the chart of Euro USD. I'll be starting from, let's say, 13th of October, just to give us a concept, or perhaps 14th of October. So here we are on the 14th of October. We can clearly see that our value line is bullish. Right? I'm going to do a slight variation from the technique we used yesterday. So rather than pick a particular hour, permit me to use what we're already familiar with in Simply Pips. It's going to be the Asia high or low. We discussed optimization yesterday and also discussed workability of how to choose your own time and how you can optimize it. So I won't bother us with that today. Today we'll be using this template and strictly use Asia high or low. So these three dashed lines you could see up there, above and below, delineate Asia high or low. So if price closes beneath it, I'm seeing that this is a bearish breakout of the Asia range. And if price closes above it, that is a bullish breakout of the Asia range. However, if I got a bearish breakout here, I would not be interested in taking this trade, even though it is bearish. I will be looking for something that confirms with the short-term bullish trend. So what do? We wait for the lowest bearish candle, which is this, to be eclipsed by this bullish candle. At that point, I can now begin to think of a way of entry. All right, so yesterday we didn't discuss entry. We won't discuss entry now too. But you just know that, okay, you are bullish. You could decide to enter for your bullish trade at the close of that bullish candle, or you wait for it to retest your breakout points. Whichever one you choose, this would have been a losing day or a winning day, depending on where you enter. But again, price moved to the upside. The next day, price attempted to break out, but never really broke out. Breakout for us is a candle close on 1 hour. Right, so price came back down and closed beneath this range. You see that that's a close beneath. Then candle price came back and closed above. So this is our buy signal. Unfortunately, it didn't go too far, but if you were scalping like we intend to do, that would have been a 30 pips move, depending on how you frame your entry. That's all dependent on you. We are on the 19th now. So on the 19th, we had another bearish breakout. We would have been looking for price to close above the lowest bearish candle. I never did. And then price flipped, the value line flipped bearish. We are no longer looking for reasons to buy. We would rather be looking for reasons to sell. So it's all dependent on you. Would you want to sell instantly at that point or wait for pullback? Or just say, since I have a flipping bias for that day, I'm done for that day, go look at another pair. It all depends on you. And again, this should not be done haphazardly. You should have data to support it. So this day we are bearish as at the time we woke up. but price broke to the upside. So we would have been looking for a reason to sell if price had come back and closed below the highest bullish candle. It never did. It attempted 3 times, but never really did. And then we got a signal here that we are bullish. So would you take your buy from this point, or would you wait for price to come back to what we traditionally would have called perhaps an OB or a reference point to buy? Whichever one you did, you would have enjoyed some level of profits. Again, this is a scalping method. You are scalping, right? You just want to go in and get out quickly. So let's look at the next day. This is a bullish value line day. Again, you only buy if you have a bullish breakout of the Asian range, then you just pick it up, or price does the reverse, right? So in this case, price broke to the downside. It attempted to break bullish here, but never really succeeded in doing that. Then it broke to the downside, and you'll be waiting for a candle close above this region here, and that is your reason to want to take a buy. Again, we've not discussed entry. You might want to wait for price to come back to this zone to buy, or you simply take a buy straight up from the close of that candle. Whichever one you do, you should have data to support that. On the 24th, we didn't get a bullish breakout of the Asian range, but rather got a bearish breakout here. And then we got a close above here. And that again was our winning trade for that day. We remember we're scalping, right? Also have at the back of your mind that you could have used any other method. You could have used 2 candles of a particular day, of 2 1-hour candles, that's 2 hours range, 1 hour range, 3 hour range. You could have used inside bars, which we discussed, I think early last year for the guys in the Heroes group. We used inside bars, whichever one we want to use. There are no hard and fast rules in the Forex market. There are large camps, one camp thinking that price is manipulated and there's an algorithm pushing it, and the other one saying it is completely haphazard. I've never met any from both sides that could trade very, very confidently, putting all of their houses on sale just because they are very confident of the story that they are saying, right? Every strategy is a story. So choose whichever one, go back test it, have some data, then go to the market. If you have your ass whooped, sorry. And if you whoop the market's ass, be humble about it. So here we have price coming down. Again, a bearish breakout. We'll be waiting for a close above, which happened here. Again, we've not discussed entry, but that is it. And that is your bullish move. This day, we simply had a bullish breakout straight up. So when we have a bullish breakout straight up, we either will enter a trade here, right? That's the breakout. It's either you enter at the close of that candle, or you wait for something. Yeah, you determine what you want to. Some people will say we're waiting for fair value gap. Determine whatever you want to, right? If you enter at that point, you still would have made some profits. If you wait for it to come back and fill out the fair value gap, you also would have made some profits. If you're waiting for it to come to the OB, which is this, all of these candles are within the range of this candle, you might not have gotten an entry. Whichever one you decide to do, you do. So on this day, we are bullish. We'll be waiting for a bullish breakout on the Asian range or a close above the lowest bearish candle, right? And would have gotten a bullish signal here, would have gotten a reason to buy at this point, and this would have instantly gone to our stop loss without apologies, right? This is where I said everyone has its pros and cons. If I change my value line here and turn it to 3, you might discover it's basically the same thing for this day. So no problem. Let's go back. If I find another day, I'll give us an example. So we came bearish here. What would you want to do? Would you want to take your sell simply because you got a bearish change, or you want to wait for price to pull back to cover the fair value gap here before you take your sell? Whichever one you decide, one you want to go decide. And of course, you could say, because I had a flip in trend on the same day, then I'm not touching this pair. I'm going to look for another pair. I must state at the back that this particular indicator has something to do with Bollinger Bands. So except if you are following a slow moving pair, something that doesn't have much volatility. You could trade as soon as that indicator flips. If you are trading a very volatile pair, I'll advise you don't trade as soon as this indicator flips, because it will usually do some pullback. All right, but that's on the side. So here we are, this is another day. We simply had a bearish breakout straight up. So what do we want to do? All right, once we get a bearish breakout, you could decide to either take your sell at that point, or then wait for the fair value gap, which is somewhere at this point. So you'll be taking your trades here. And this would have been a losing day because it kept pushing back upwards. I don't know where you'd have placed your stop loss. This would have simply been a losing day, depending on what you want to see. And we don't try to butter losing days. It's part of the business. So this day, we're bearish. If we had gotten a bullish breakout, we wouldn't have taken it, but we got a bearish breakout here. And then again, like I've said, umpteenth time, you could take your sell there, or you could simply wait for the fair value gap, or you could simply wait for the OB, whichever one you want to use. It would have worked out this day. Doesn't mean it's going to work out every other day. So here we had a bullish breakout. So stage one of framing out this strategy would have been attempting to buy. Not that we wouldn't have made money. At least price moved up a little, even though it came down massively a little here too. But using this methodology, we'll only be looking for sales when the highest bullish candle has been violated. It happened here and never gave us an entry to go. This obviously happened, will be a news event, and I don't expect anyone to be taking a trade down here, not even after yesterday's low has been taken. So on this day, we are bearish too. Price first broke out to the upside. There we have it. Broke out to the upside. We'll be looking for the highest bullish candle, which happens to be 1 minute, please. 1 minute. All right, so on this day, our entry would have been somewhere around here. Remember, everything I'm doing here is still on 1 hour, right? So by the time you want to frame your entry, you could decide to go do your entry on 15 minutes, on 5 minutes. We have people doing it on 5 minutes, 3 minutes, whichever one you choose, right? The idea is just to get the idea of how to move. So if you have taken a sell here, you definitely would have had your stop loss hit on this hammer there, inverted hammer. So here we had a breakout straight up. Again, if you decide to enter at the beginning, remember we are scalping, you would have gotten something. If you are attempting for price to come back to the fair value gap, sorry, it wouldn't have given you that entry. So here we're still bearish. You'll be looking for a breakout or the opposite. It did neither, and then came and broke above here. Right, it broke above on this candle. You'll be waiting for a bearish close below. It never did, and then became bullish. If you've gotten in, fine. I wouldn't anyway. But if you've gotten in, it's easy to say I would have gotten in here. In real life, bros, I'm not getting anywhere. I'm not entering that trade. It's easy when it has happened. So on this day, it broke to the upside. So you also could have attempted or wait for the fair value, whichever. Look at this day, right? This looks more like our usual HPLR setups. Price broke to the downside, and then we're waiting for candle close above. Right, and that is that here. And then you're taking your trade to the upside. So we could keep doing this. I just hope you get the concept. If you are bullish, you are trying to catch a continuation trade. So this is what we are doing. If we are bullish, we want to catch a continuation trade. This move here, usually HPLR would have given us an entry here. But what about this 2-3 days it is to continue moving? It might not come back to Asia low. It might not come back to Asia low before we buy. Right. So if we get a breakout, we just take it and continue. Right. But you need to frame it around something, especially if you are trying to do what it seems I've been preaching for some days now, which is trying to automate your systems. So you don't have to sit in front of the chart all day. This was a bullish day. And it came to the downside. You're waiting for a bullish close above, and it practically never happened until price turned bearish. All right, and this is a bullish day. This was a close above here. and then that's your buy, and that's it there. This was no close above, but close here. It didn't close above, but it came and closed, and this was the close. Right, this could have been your entry here, or if you wait for the fair value, right? This was a close above, but it happens to be too far. Just let it go. Just let it go. Right? This was a close above, and then it came back closely to that point. Yep, that is a good scalp for the day. And that's about 50 pips. You could scalp 20, scalp 20, 15 out of it, and take a walk. So for this day, we were waiting for a bullish breakout. It never really happened, and then we had a bearish signal here. Again, two ways. You could have entered simply at that point, or you could have waited for the fair value to be covered and before going bearish. Right. So this is one way you can frame this. If you love trading on lower time frames, I'll suggest you get your template sorted out. Let me take out all the objects here. Get your template sorted out. You come here and save it. Let's say Flash. Let's call this template Flash. Right, so you open another one, Flash. Right, so let's say you love trading lower time frames, right? So what you could do is that let me do this. All right, so you have your two templates. You use this button here. This button, arrange windows on non-overlapping tiles, or simply press Ctrl-Alt-R, right? So I can have my 1 hour on the right hand or left hand side of my screen, depending on what you want. And then I can have my lower time frame, like 15 minutes or even 5 minutes. Let's say I want to have 5 minutes here on my left hand side, right? And I can then see what is happening on the 1 hour, and then frame my entry on the lower time frame to either go long or short, depending on what is happening on the 1 hour. The reason is because if you shift to a lower time frame, let me expand this again and show you what I mean. If I go to 30 minutes, right, it may not all be bullish. I'll be having bearishness, bullishness, bearishness, bullishness, and that might not be what I want, right? I've backtested this using 1 hour, right? 1 hour extends for a while. So even this bearish move was seen as a pullback for a buy on the 1 hour. For 30 minutes or even 5 minutes, or the case may be, it would have turned bearish, right? So if you want to do this, you can share your windows into two, and then simply have your 1 hour on one side of the chart, then your 5 minutes or 15 minutes or any other lower time frame entry time frame you want to use, and use that as a reason to take your sell. Of course, obviously for the same pair, right? Obviously for the same pair. I'll pause recording now again and see